Hey guys, what's up? Welcome to another episode with me, Shashank Udupa. And today we are going to do a very nice deep dive about the Groww IPO. And we're going to talk about both the good stuff and the bad stuff. And we're going to look at everything that there is to make an unbiased video on this. Right? So let's quickly jump into the Groww video and understand what is going on with this company. How does the valuation look like? Where is it placed with respect to the other peers? And what is the long-term horizon for this? So let's quickly understand. As you guys know, Groww is a Bangalore-based investing platform that was launched in 2017, and then they have been growing very well. And obviously, the other platform that are there in this space, there are multiple different peers that are there, like Angel 10. There are multiple different peers, but Groww in the last few years have come up very well, and they've started taking the number one position with respect to total number of active clients. And I'll show you more about it. Right now, not just that, so they have basically scaled their user base also quite aggressively, and they have got into different kind of business services as well. So if I have to break it down, yes, they have the broking revenue. They also have a NBFC arm for consumer credit revenue. They also have got into bonds, LAS, API trading. All of these different baskets have also come into it, right? And between FY24 to FY25, you can see that every 1 in 8 rupees in SIP inflow was done on Groww. And they basically have a very strong hold when it comes to investing via the SIP basket, right? And this is something that they captured very early on, that if you are doing an SIP, you will do it via Groww, and that is their main core focus that they had over a long period of time, right? And they have approximately 12 to 13% market share in the total SIP inflows in the country. And this SIP inflow, by the way, is going up quite drastically, and I will show you that data as well that was there in the RHP document. Now, apart from that, out of every 3 new SIP registrations that are happening in India, 1 is being done through Groww. So now you can understand the scale at which Groww is operating right now, and they are basically the number 1 broking platform right now with terms of total number of active users in their base. Right now, coming to the entire market, if you have to see this, the broker versus active clients, and this is something that we got from Chittorgarh, you will see that the active user base, the NSE active user base on digital platforms across different brokers, you will see that Groww is sitting at number 1, Zerodha is number 2, Angel 1 and Zerodha are very close with number 2 and number 3. Then we have Upstocks, ICICI, HDFC, and the legacy bankers coming in, brokers coming into the picture, right? And if you see the growth that they've had a very strong growth with respect to the number of active clients that are there. Now, coming to the second part, when you talk about active clients, there are 2 types of clients. So let's please understand this. One are equity clients and one are F&O clients. Okay. Now, how do I break this up? Equity clients are someone who just come, invest long term, do SIPs, invest via mutual funds, and continue their growth journey there. The second, there is a different type of journey where you come, you are a trader, you do swing trading, right? And you would take MTF, which is margin traded facility. You take leverage to trade. Basically, the broker gives you some kind of a leverage. You might do F&O, you might do options, you might do futures, and that is where you start, the other side of the journey comes into the picture. So there are 2 types of journey. And in the last few years, if you've noticed, the F&O portion of the entire market, the brokers were making a lot of revenue for that. Whether it was Angel 1, whether it was Zerodha, whether it is Groww, the F&O portion was quite strong. And with most of the brokers, they used to make a lot of money on the F&O side. Okay, just to give you some context there. And after that, we saw MTF coming in, which is getting some kind of leverage to trade. Like I can use an MTF facility on Groww or Zerodha or any platform that you have. Everyone has different rates of MTF, and that used to also obviously generate some kind of income for all the brokers. So let's understand how this distinguish happens when it comes to Groww, right? Now, before we go into that, let's understand how the unit economics works when it comes to Groww. So if you look at the unit economics of Groww, you will see that as their user base went up a lot, right? The platform AARPU, which is usually called as the average revenue per user or the ARPU, and this is something we also see in telecom companies, like we talk about Jio's ARPU, Bharti Airtel's ARPU, which basically means what is the average revenue I'm pulling from each user, right? And how much is the cost to serve, what is the cost to grow, and then what is the adjusted cost to operate. So your operating expenses and your cost to grow, which is your marketing and other services, if you add all of that, the adjusted EBITDA today comes to around 59% is their EBITDA margin. Now, this is obviously very good, because usually what happens in platform companies, the margins are significantly higher, right? Because as you scale, you get unit economics becomes better, your cost economics kick in, and you obviously make a good free cash flow coming into the system, right? So that is one very big advantage that you usually see with a lot of brokers or a lot of platform companies also, you will see a similar trend, right? Whether it is NSC or BSC, you will see that they have a same trend. CDSL, NSDL, platform companies, they have a similar trend. So they make very good free cash flow over a long period of time. And what do you use that free cash flow in your business to make more revenue is the game over there. Now, this is a very interesting graph that was there in their RHP, where you look at how many people are total transacting users and active users. And as you can see, the total transacting users and active users are also quite interesting. The graph has gone up quite a bit and they have a huge amount of growth over here as well, right? And 13.3% of the people are people who invest in stocks and 2 or more other products, which might be F&O, which might be mutual funds as well. Only stocks is 48% of the platform only does stocks, right? And 38% of the platform does stocks and any other one product, right? So these are the two things that they do. Okay, now let's come to some key performance indicators. Very interesting to look here. Now, if you see, let's talk about the mutual funds first. If you see the mutual funds from 2023, 24 to 25, the mutual fund active users has gone from 2.84 million to almost 8.37 billion. That is a 4x jump in the active number of mutual fund users in using via Groww, right? And the mutual fund assets held on Groww, which is approximately a very, very, very big number, right? 1130163 million. Okay, and the number of mutual fund in SIP inflows went from 79,900 in millions to 3,40,000. So as you can see, the SIP inflow is also growing. The normal SIP is also growing. The active users are also growing, and this definitely helps Groww a lot. Coming to broking services, now as you see, the broking services revenue has also, total number of broking transacting users have gone from 5.49 to 13.52, and their broking orders went from 602 to 1,800, which is a 3x jump from 2023 to 2025. I want to also highlight one more thing. In 2024 to 25 June quarter, you can see that the broking transaction users have fallen down slightly, right? And even the broking orders have gone down from 475 to 378. Now, why was this the case? This was mainly because we saw some new rules coming in F&O segment. We saw the STCG also going up, and we saw a lot of brokers are talking about this, that their derivative income, which was the F&O income, slightly went down, right? And you can see that here as well. If you see it in the past, 2023 to 2025, the derivative total number of premium turnover and derivative users have also gone up. But here you will see that slowly it has started taking a small hit now. And this is not only a problem with Groww, this is across. We also went and saw the Motilal Oswal recent result that came out, and even over there the broking revenue has gone down by 10-15%, and this is an overall industry hit that has been taken, which I personally believe is a temporary hit, because over a long period of time, as the base becomes bigger and the number of users becomes bigger, this will obviously become better, right? And I also believe that STCG won't be 20% for a long period of time. There will be some reduction in STCG, which should spur more growth into the ecosystem. Coming to the consumer credit business, their disbursements have also gone up quite well. So that is something that is also good to note. And MTF active users, this is something that is happening across the board, where the MTF book is going up quite aggressively, because more and more people are now taking leverage to actually trade into the system, right? Now, coming to more unit economics over here, you can see that the platform ARPU is 3,300. The total MAUs, which is monthly active users, is around 12.69 million, and that has been growing from 4 to 12, which is a 3x jump. That means more active users, better, obviously, for the company. And overall, it looks like the unit economics looks very interesting. Coming to the revenues, if you look at the revenue growth, last 3 years, the revenue has gone from 1,100 crores to 3,900 crores. So it has been almost a 3x jump in the top line. EBITDA margin is also there. From 36%, it has gone to 59% as of last year. And if you look at it for this as of June, you will see that the revenue EBITDA margin is around 56%. And we see a slight dip in operations from we'll see a slight dip in operations from 1,000 crore to 904 crores. I think this is mainly because of the slight drop in broking revenue, which happened across the industry, right? But if you see from a cash flow perspective, there is absolutely no problem in the cash flow, right? So coming to revenue growth, they have expanded 85% CAGR between FY23 to FY25, with profit scaling as operating leverage also kicked in. And as I said, the more and more this business becomes bigger, the operating leverage, the EBITDA margins will go up even further. And that is how usually these platform businesses work, right? Contribution margin is at 85% and PAT margin is at 45% in FY25, which is amongst the highest in the industry right now. Okay. Now, coming to the offer structure, for all the people who want to understand the offer and shareholder dynamics, the fresh issue will raise around 1,000 crores for the company to fund the business expansion and capital requirement. There is also an OFS, that is approximately 55.72 crore shares, where we see OFS is basically offer for sale. And here we basically see the old investors getting out of the business. And these are usually the PE funds and VC funds, which usually take an exit at a IPO, which is Sequoia, which is PeakX, Ribbit, Y Combinator, and Alcon Capital, and a few other more funds have taken an exit over here, right? And the weighted average acquisition cost of these shareholders ranges between 1.91 and 3.4 there. So they have basically made a huge amount of return in this entire IPO because they have been investing from a very early zone and now they have exited at a very high zone. Obviously, wealth has also been created at the same pace. Now, coming to the IPO details, let's look at this. So where is the money going to be used? The 1,000 crores that we spoke about. Brand building and marketing is going to have 225 crores of allocation. The NBFC arm is going to have 205 crores of allocation. The MTF business or the MTF book is going to have 167, which is already sitting at 1,000 crores. That is going to have an addition of 167 here. Cloud infrastructure to scale, 152 crores. Inorganic growth, which is maybe acquisitions, and general corporate purposes is going to be around 310 crores. So that is basically how it is going to look overall like now. Right? How is the allocation to the entire IPO? Let's understand this. So 75% of this IPO is going to be for the qualified institutional buyers. These are usually your HNIs or your mutual funds or PMS and all of those guys. 15% is going to be for non-institutional buyers and only 10% is going to be for retail investors. So the retail investor allocation for this entire IPO is only going to be 10%. So if there is heavy demand for this IPO in the day 1, day 2 itself, and because it is profitable and it is growing, there might be a concept where a lot of people might invest for listing gains also. So that also might happen. So be aware of all of these things. But 10% is the retail investor allocation that you can see, right? Coming to the next one, let's talk quickly about the valuation thesis, right? Now, compared to Angel One, which has an average revenue of 6,000 rupees, Groww has a lower average revenue of 3,300. This is because Groww has a huge amount of audience, right? And Angel One has a smaller set of audience where they're getting good amount of revenue. That is because Angel One also has this system where they cross-sell a lot of products. And Groww has just started entering into new businesses where they can also eventually start cross-selling into different industries, right? Angel One is trading at 30p. Groww is planning to list at 33p. Earlier, the P ratio was higher. Now they have reduced the P ratio and now it is going to be a fair value listing that basically will come out right now in the whole business, right? Now, let me check for some key factors and risk factors because this is something that everyone needs to look at, as you have to see good sides and you have to see bad sides as well. Now, basically, a large number of OFS component may create short-term listing pressure due to increased share supply. This is because in the IPO, a huge amount of offer for sale is happening. I think most of the money is going into that purpose itself, and that may create some short-term listing pressure that might come in, right? Again, there is significant exposure to subsidiaries to the intercorporate loan, introduces credit and operational risk because they have the NBFC arm, they have the credit arm, and they have the broking arm, right? And they all operate between each other. So there is inter-operation risk also coming into the picture, right? Execution of aggressive expansion in lending and margin projects could create a problem. Now, this is because the MTF book requires a lot of capital to be put into it and to lend. And if tomorrow there is something that goes wrong with the whole MTF industry, then all the brokers will get affected at the same pace, right? Again, there is RBI regulations, there is SEBI regulations that any change happens, there might be a massive impact to every broker in the industry, right? Heavy reliance on market activity and investor participation, because as you see, equity market works in cycles. So if there is a good cycle, brokers and the whole financialization space does well. If there is a bad cycle and we're in a bear market, not many people will come and do F&O or any kind of trades, right? And we saw this in the last 1 year, the market has not moved and the F&O activity went down quite a bit also. Another thing that we should be very careful when we look at every single P&L and balance sheet of every company. A lot of people use adjusted metrics such as adjusted EBITDA, contribution margin. So these things, as an investor, for me and you, when the IPO comes out and when the result comes out, we have to be very careful when we analyze adjusted EBITDA and understand actually what is the real EBITDA and what is the adjusted EBITDA, right? So these are the key risk factors that everyone needs to look at. Okay, now again, why have I done this video? The main reason I've done this video is to show you both sides of the coin, not only the good side, because I see that a lot of times people on Twitter usually just put one side of the information and they always hype it because most likely they would apply for it and try for a listing gains, right? But a true analyst or a true investor should see both sides of the coin, and our job is to get you both sides. So yes, from an overall standpoint, this looks very interesting, mainly because of the growth rate that is there, right? Over a long period of time, because of the free cash flow, because of the unit economics, because of the growth in the industry, this should do really well, is my personal opinion. Again, but I've also outlined all the key risk factors, which is the OFS coming into the picture, adjusted EBITDA that we need to look at, interoperability between the risk department and the NBFC space. So all of this again needs, and heavy reliance on market cycles, right? So this is something that we need to look at as well. And that is why I wanted to come out and give you a very clean picture of both sides. I don't want to be biased on this side or that side. And that is, I think, what differentiates our channel from most of the people around the world, right? I could have easily come here and had a one-sided conversation, but that is not how I would want to operate, because the trust that you guys put in me is also going to be very important when we go ahead. Okay, so I hope that helps a lot of people, and I hope you guys enjoyed this entire episode. And if you did, put your comments at the comment section, obviously, asking me anything you want about this IPO, because this is going to be live by the time this video comes out. Awesome. Take care. See you guys. Bye bye.